What's up, traders? Just want to take a quick look at Bitcoin. It's been a while since we did a full-on focus video, and we've seen some recent developments. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so I'm on the weekly chart right now. So I just want to go ahead and pop up the indicators real quick. And we're just going to focus down here on the jewel thief. We'll turn on our drawing tools as well, and just want to pay attention to what's taking place. We're seeing now in real time that we're starting to print that hard sell signal on the jewel thief. And if we just pop that up right here, we'll see not only did we get the actual like bear cross where the blue stochastic crosses below the pink stochastic, but we also dropped down below the 80 level. So now we're going to lose the red highlighted background and we're getting the hard sell signal. And while that doesn't always mean that we're going to have some deep correction, it's definitely worth paying attention to. So we see here at that previous peak right here, we got the hard sell signal and we proceeded to fall 68%. Prior to that, we got the hard sell signal on that initial top and then exited the bullish control zone. And from there, we dropped an initial 48%. But again, we went up slightly higher and then ended up, when it was all said and done, down 72%. So it's definitely worth paying attention to that we're getting that weekly hard sell signal. And the other thing that's worth paying attention to is what the actual posture of the market looks like. We have a very, very bearish downtrend taking place, and then we get essentially like a dead cat bounce or just a reflex rally off of like some lows, some key support, etc. We were able to reclaim the 200 exponential and simple moving average, but on the way back up, we spent a ton of energy all the way from the bearish control zone and a hard buy signal all the way up into the bullish control zone and a hard sell signal. So the same way we got extremely bullish down here and we're able to capture this move, I'm now starting to get extremely bearish right here. Now I don't want to start shorting or selling into support. And the truth is, as long as we're above the 200s, I'm technically still bullish on the market. But if and when we start to close back below 25,000, that all changes. So we'll go ahead and jump back over to the daily and we're just going to pay attention to what's actually taking place. So obviously we had that initial blast up here. We came back down and back tested support. And then we saw the blow off top back to that same level, which essentially amounted to the Adam and Eve double top that we had called out in advance. And it was coupled with bearish divergence from the peaks. Not to mention we started to lose our momentum, lost the 200s, broke down. And then we saw that deep correction. The measure moved to the downside. And then we started to bottom out down here. Since then, we've had an aggressive move back to the upside. We've reclaimed the 200s, and everyone is starting to call this a new bull run or a new bull market and getting extremely bullish on crypto. And I just don't think right now is the time. It's okay to get bullish when we're down here, but I don't think now is the time to get bullish on crypto. Now, we are going into a holiday weekend, and typically they are pretty bullish, or at least like neutral bullish. So maybe we see a little pop over the weekend, and we'll talk a little bit about what's taking place right here. But let's just look at the actual corrections we see. We have essentially this green channel to the upside. We touch once, we touch twice, and then of course we keep operating the channel. Once we broke down from that, we started to operate inside of this channel right here. Now there was a couple times when we poked out to retest the 200s. There was a couple times when it looked like we were breaking down, but we immediately reclaimed that area. But you can see very, very clearly we traded inside this range for a long time. Once we broke out of that range, you can see immediately the bullishness picked up. We retested the 200s, and then we started looking at that exact same situation again. We had essentially a little mini top, just like we did back here where we got that double top. We see the same thing happen right here. The initial top, the second top slightly higher, and then the breakdown to the 200s. We were able to essentially buy the exact bottom, like to the penny. I mean, not to brag or anything. Pretty simple though. We just bought the 200 simple like we always do. Since then, it's gone absolutely parabolic, and now it's time for us to really look at the situation. So once we broke out of that big descending channel, we started to form this new ascending channel in green right here. And we'll see that, you know, here's at the bottom, here's our second touch at the bottom, 1, 2, 3 on top, the 4 on top right there. And now we've been consolidating still inside that channel, but in a smaller descending channel right here. And now we're at essentially that support. Now, our target to the downside was a backtest of a 200 exponential at 2,500 and then potentially a push down as low as 22.8. But we talked about how that might not be the most bullish scenario. It would be much more bullish if we found support right here and then continue to the upside and an actual bull run did end up taking place. Now, that being said, 1 time down here, 2 times down here, 3 or 4 on top, you know, we have to respect this support level of the ascending channel. And at the same time, we have our descending channel right here, and we're basically respecting the support level of that as well. So inside this range, from the bottom essentially to the top, we're really just looking about a 10% move from the bottom of the red channel back up to the top of the red channel. So playing that is not really that viable, especially since we've already kind of bounced off the bottom. That really only leaves something like 7% to the upside, which means about 3% to the downside. So technically it would still be a 2-to-1 risk reward ratio. But I think the probability of getting like a wick down here and getting stopped out over something dumb just doesn't make this situation worth a little scalp trade. So if we're going to look at an actual trade from this level, the two main trades are either one, we're going to lose the ascending channel and break down and see an aggressive sell-off. And obviously that is the bearish scenario. So realistically, we would just take the measure move of the channel, basically from the bottom to the top or top to the bottom, and then that would be the breakdown. So let's say we were just going to immediately come down here in this next candle, lose support, and then we're going to start this measure move. That would take us down roughly back to 20,000, which wouldn't necessarily be a bad thing. We would be losing the 200 exponential and simple, and that definitely is not the most bullish scenario. We would be taking out the previous swing low right here. So again, not a bullish scenario. But the macro, the biggest thing that we need for Bitcoin to be bullish is we need it to put in a higher low. You know, it did put in a higher low right here, but this is all part of the same move. So if and when we do lose this channel and we see the breakdown from this level, whether it's from right here, whether it's later on, whether we get another push up first, the fact of the matter, the most important thing we'll be looking for is a higher low when and if we do sell off. So that being said, if we slap a quick fib on here and we just look from the bottom right there up to the top right here, we're at the 236 right now. So we have support from this ascending channel. We have support from the descending channel. We have support from the 236 for what to me looks like a wave 1, a wave 2 correction, a wave 3, a wave 4 correction, and then a wave 5. And now we're ready to correct the entire 5-wave bull structure. So if and when we do break down from this 236, granted, all the support is right here in a little cluster. So it's going to take quite a flush down to break that level. But let's say we do right now. The next target to the downside, we have the 200 exponential, we have the 200 simple, and right smack in between, we have the 382 at 23,775. The 0.5 coming in a little lower at 22,000, and the 618 down here with the measure move around 20,000. Does it have to happen? No, but it's worth paying attention to. We should also keep in mind that we get a hypothetical situation where we actually do bounce this level. We get a move back up here, find some support, push up and either go to a new high or a slightly lower high, and then that actually tops off, and then we get the breakdown. In which case, it's important that we're not stuck on exactly where that measure move breakdown would have taken place. Because realistically, if this thing breaks down somewhere slightly higher and then lines up more with the 618, it's going to make a little bit more sense. So we pay attention for this actual scenario here, but we don't want to focus as much on the hypothetical targets if and when this is the point that breaks. Because the whole way up, we've respected the support and resistance, and I don't see any reason right now that we should stop respecting it. So that being said, if we clear all this off right here, and then we start looking at the bullish scenario, what would it actually look like if we just don't break out of the range? You know, we have a bullish ascending range right here, you know, higher highs and higher lows. So what if this was just a temporary top? What if that wasn't a 5-wave structure completing and we're going to continue back to the upside? So without even getting crazy, we're just going to bounce from the 236 level back up to the highs. That's about 16, 17% almost. And what if we just touch at some point in time back up to the top of the channel? We're talking about somewhere closer to like 30+%. And that's assuming we just went straight up right now. Obviously, the target gets higher the longer that goes by. So if it takes months or even a year, you know, keeps moving up to the upside and gets to the top, we could easily see that target be somewhere closer to 40,000, 45,000, 50,000, you know, even potentially all-time highs. Now, obviously, there's also a very bullish scenario in which case we break out of this and then we get the measure move of the ascending channel, but to the upside instead. In which case, again, depending on when and if we break out, you know, we could be breaking out from like the $36,000 level and taking us up into like the mid to high 40s. But that's a lot of hypotheticals. Right now, you guys know how I trade. We were in this range right here from November of 2021 until we broke out here in January of 2023. So not quite 2 entire years inside this range. So the smart thing to do when we're trading in a range, especially for a long period of time, like 2 years, that's 700 days inside this range. The entire time, the best thing to do would be to trade with the trend. So naturally be more bearish, and then to also sell resistance and potentially buy support or use those as your entries and exits for either longs, shorts, taking profit, etc. While we're in this small pattern right here, and we haven't been in it nearly as long from when we put in that bottom was around January of 2023. And now here we are touching back down on it again in May of 2023. So we've got about 4 or 5 months inside this range. And again, the same thing. The best thing to do would have been to buy support and sell resistance. And the best thing to do would have been to have a bullish outlook now that we're above the 200s. So we had a bearish outlook when we're below the 200s. We had a bullish outlook when we're above the 200s. We buy support, we sell resistance, we trade the range. And honestly, I think that's the best thing to do for now. Now, if and when we do get a breakout or a breakdown, then we can start reevaluating. We already have some clear levels that we've identified. 25,000 is very, very obvious. And then after that, we can look at the other 200s, the 382, the 0.5, etc. But right now, I'm looking at this as a buying opportunity, expecting this area to hold. We have what we like to call a cluster of support right here with the 236, the ascending channel, and the descending channel. All of that support culminates right here in this exact spot. So could we break down? Could we get the bearish case? Yes. But again, I'm always going to be slightly more bullish as long as we're above the 200s. And I'm always going to be buying support and selling resistance as long as we're trading in a range. And when we can draw a tool like this and it's as clear as it is, or a tool like this and it's clear as it is, or we can draw our Fibonacci's from highs to lows and clearly map out a 5-wave structure that follows all of our rules, that to me is confluence. And the more confluence we have, the better. So could we get a wick down here to the 200 before we get the move to the upside? Yes. What I'm going to be paying attention to is actual closes outside this range. There's not a lot of ways that we could draw this range differently, that someone else could be looking at it in a way that differs from ours, but we could definitely get a scenario like this where we get a push down, strong wicks, but we actually don't really lose the support level or close outside of the range. So yeah, that's it. Just wanted to do a quick little update on Bitcoin. Obviously, a lot has happened so far. Nothing unexpected whatsoever. We basically hit the top right here, exactly where we were expecting. And now we're back down at the bottom of the range, back down at some support. It took a little longer to get there. So maybe we don't get the perfect touch of 25,000, the 200 exponential, but I wouldn't rule it out yet either. And if we just zoom back out here and look at that macro big picture, when I look at what's taking place right here, we had a massive bull run. We had a double top. We had a breakdown from that double top. We hit the measure move to the downside. We bottomed out, and now we're back testing the key support that we broke down from. So while the 200 exponential and simple are blue and slope to the upside, and I'm bullish because of that, we need to really pay attention to how strong of a support this $30,000 level was and expect it to be an equally, if not stronger, resistance level. A lot of people got caught with their pants down through this level, either loading up or just being full-on degenerate moon boys. And the truth is, there is a lot of volume that took place right here at extremely high prices. And a lot of people would just be happy to get back out of Bitcoin or crypto at break even at this point. So we've got some bullish scenarios. We've got some bearish scenarios. We know where the posture of the market is and what it's going to take to change our overall outlook. I do want to remind you guys, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So yeah, that's Bitcoin technical analysis. Just wanted to take a little look. Obviously, we've seen basically what we were expecting play out. So yeah, the crypto space has been a little bit boring lately, a little lackluster. Market's been trying to rock us to sleep. So yeah, that's it. Just want to take a look at Bitcoin. If you enjoyed today's video, found it entertaining or any other value in it, make sure to like and subscribe. Really helps out the channel. Free indicator links down below. All right, I'm out of here. Crypto Trend Trader, and I'll catch you on the flip side.